My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just entertain, but put it all in context. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Today, yes, was all about the Middle East, about Iran firing waves of ballistic missiles at Israel, something that naturally did hurt the market, with the Dow dipping 173 points, S&P sinking 0.93%, and the Nasdaq tumbling 1.53%. But despite the geopolitical turmoil, which I never want to downplay to you, tonight I want to spend some time celebrating the quarter just passed, because a remarkable thing happened. When you look at the 10 best performers of the third quarter, we discover that this formerly narrow market has totally changed its stripes. I pride myself on knowing tons of stocks. You know that. I really try to understand and be my own chat GPT. But the winners this quarter taxed every microprocessor implanted in my little head. No FANG, no Magnificent Seven. It was like Robert Altman's The Player. No Bruce Willis, no Julia Roberts. So rather than dwelling on the possibility that this regional war in the Middle East keeps escalating, I want to do something constructive tonight. Focus on how we've finally gotten a real broadening out of the market's leadership that we've all wanted and that so many call for. This was the quarter where we got the revenge of the little guy companies, the ones you rarely hear about outside, of course, our lightning round. That's why I want to highlight the S&P 500's 10 best performers in the third quarter, and we're going to do them in ascending order. Now, this list is pretty much devoid of barn burners, which is why I do like it so much. These are companies that not only can you sleep at night with, they actually may put you to sleep. Fortunately, the 10th best isn't one of them. Axon Enterprise. That's the company that makes tasers, body cameras for law enforcement, as well as a digital evidence management business that helps keep track of all police records. Axon stock has been red hot for ages. So it's no surprise at all that it rallied another 35.8% in the third quarter. Seems strange that we don't talk about this stock more, but it's very much part of the broadening of the winners column. The ninth best performer, fortunately, hits close to home. It's Stanley Black & Decker, which is a big position for the Charitable Trust. Why? Because we wanted to invest in a company that tends to outperform when mortgage rates go lower and people fix up their homes. After years of lagging the market, Stanley Black & Decker has come back with a vengeance, up 37.9% in the third quarter. It was rallying in anticipation of the rate cuts. Do you know that the big growth's not even there yet? But I bet it can keep running. Number 8 is Vistra. Now, this is a power company with a key nuclear station called Comanche Peak Nuclear Power Plant. That includes 2 nuclear reactors. We've seen this insatiable demand for clean energy for data centers and the hyperscalers that use them. It's exploded to the point where Microsoft's getting one of the reactors in 3 Mile Island to reopen. Not the one that had the meltdown. So Vistra was up 37.9% for the quarter. It's now up 218% for the year. Hard to imagine a boring old utility making that kind of move, but carbon-free electricity has become one of the hottest commodities out there, and taking up a whole bunch of stocks. And Vistra's front and center. You always see Constellation Energy in that group, too. Number 7. All right, we've gotten used to people coming on air and warning us about the looming demise of commercial real estate. Well, someone better tell the people at CBRE, which does everything from commercial real estate advisory and transactional services to valuation and property management. The fact that this stock could be up almost 40% for the quarter tells me maybe we should think twice before being so negative on commercial real estate. They know nothing. 6. You're always going to get a takeover in the top 10. But this one really came out of left field. Kellanova, the snack food company created when the old Kellogg broke itself up, it's being bought by the privately held Mars for a huge $35.9 billion price tag. Now, almost no one saw this one coming because we're constantly being told that snacks are a dying category thanks to the GLP-1 weight loss drugs. Mars clearly doesn't think so, and nobody knows junk food better than they do, and that's why the stock of Kellanova was up almost 40%. 5th, you and I, we think of Home Depot, another charitable trust name, as being the place for professionals to buy the products. They need to put up new houses, renovate old ones, but the pure play housing supplier for the pros is actually Builders First Source, a niche wholesaler that we've featured on the show repeatedly. Stock was up 40.1% in the quarter. Again, you cannot wait for Builders First Source to put up big numbers before you buy it. This is an obvious rate cut winner, so you got to get in ahead of time. In this business, anticipation cannot make you wait. When you think about what goes into construction, flooring is clearly a necessity, and flooring is synonymous with a company called Mohawk Industries, the king of carpet, hardwood, and vinyl flooring, not to mention pretty much everything else you step on. Mohawk's a natural buy in a rate cut cycle, which is why the stock jumped 41.5% last quarter. And again, this is well ahead of any turn in earnings. Number 3, Palantir Technologies is a data analytics company that put up some good numbers, but it's better known as a stock with a huge following among individual investors, stoked by its flamboyant CEO, Alex Carr. Now, a little more than 2 weeks ago, the Wall Street Journal published this incredible piece, headline, quote, "The fanatic amateur investors behind Palantir," end quote, which gave some great insight into the avid fan base that rejoiced when the stock joined the S&P 500 last month. You know, they came in on top of the admission and helped the stock soar 46.9% for the quarter. Next, it wasn't that long ago that many of us were fretting about General Electric's power division, that the company spun off as GE Vernova as part of its bid to become a pure play on aerospace. I know I asked GE Aerospace CEO Larry Culp, he's the mastermind of the breakup, how confident was he in the credit rating for the power business, which includes the building of natural gas plants, windmills, nuclear power. Turns out GE Vernova had nothing to worry about. In fact, the spinoff came at the perfect time. Stock was a home run, zooming 48.7% in the third quarter as power generation's become a phenomenal growth story. Ugly duckling into dynamite squad. Finally, you want broad? How about a company that manages an insurance exchange for people who want to buy policies? And it's called Erie Indemnity. That's Lake Erie. Now, that was the best performer in the entire S&P. It's up 49%. Now, a lot of that had to do with the stock's admission to the index, which brought in a slew of automatic buyers. But, man, Erie Indemnity managed the Erie Insurance Exchange. $10 billion in premiums, around 7 million policies in force. And when the Fed cuts rates, the insurance companies go, wow. This one's truly emblematic of the eclectic, non-tech group of winners that dominated the third quarter. Erie's success is eerie. Here's the bottom line. Next time you hear that this market's made up of just a few cloistered winners, I need you to remember this list I just went over. The recent rally is all about companies that you haven't heard of, or maybe a little word of mouth about, that benefit from lower interest rates or the endless need for power or security. It is a remarkable list that represents a real broadening out of the winners. Some would say it's a sign of where we're headed. I might not go that far, but clearly we need to start digging a lot deeper to find winners going forward. They're no longer as plain as the nose on your face or the tech in front of your eyes. Let's take some calls. Let's go to Frank in New York. Frank.
Welcome back, Jimbo.
Thanks
I love the shows
Frank.
last week. Shows last week were great. Really
I am so
lot.
glad. Thank you. That's Regina Gilgate, executive producer, puts those together, and it's really sensational. It means a lot to me to hear you say that, because I do need some time off periodically just to recharge the batteries. How can I help you?
You're the hardest working man in the business. Football teams are struggling right now, and at least it's baseball. Maybe a Phillies-Yankees World Series is on deck, I hope.
I'll take that. I'll take that. I'll take anything good from Philadelphia at this moment. What's happening?
So I have a question about Lyft. I use both Lyft and Uber as a customer, and right now I'm only using Lyft. They seem to have quicker pickup times, better prices. And I talked to their drivers, and the drivers also seem to be doing better with Lyft. They take care of them better.
Right.
I bought Lyft back in August. It's been on fire lately. The new CEO, he seems pretty sharp. No, you don't like
I like David Risher very much, but I'll tell you something, Frank. As good as Lyft is, and I like David very much, you know, I've got to tell you, Uber is a juggernaut. They're doing so many things right. That's the one I do prefer in the group. Let's go to my home state of Pennsylvania. Keith in Pennsylvania. Keith.
Hey, Mr. Cramer, how you doing?
I am doing well, Keith. How about you?
Doing all right. Recovering from hernia surgery, so taking it.
Hey, I had a quadruple. Well. Be very careful. I went right back and started lifting, and it was all wrong. Take your time. How can I help?
I appreciate that. Okay, so a few weeks ago, you had Elf CEO on there, and you seemed to be impressed with the stock, but it's still it consolidated and still on a leg down now. I guess with the ports closing, at least are on strike anyway, and with what's going on, do you suggest, what would you suggest a good price point would be for an entry point for Elf?
Well, candidly, I've liked Terramine so long that I kind of lost track of the fact that the group itself has become such a bear to own. I'm reluctant to say buy it yet because it is in free fall, and I find stocks in free fall We have to wait. They will tell us when to buy. It's when they bounce and not until then. All right, listen. The next time you hear that this market is made up only of a few winners, I need you to remember the list I just went over, please. It's a remarkable set of names that shows you just how broad the winners were in the third quarter, which was a sensational quarter. Now, on Mad Tonight, Chipotle's had some changes at the top following the former CEO's move to Starbucks. I'm taking a bite of the latest with the company's top brass. Then, McCormick reported a solid quarter this morning, sending the stock higher. So could the stock add some spice to your portfolio after these latest numbers? You do not want to miss my exclusive. And Signet CEO announced her plans to retire after successfully turning around the jewelry kingpin. Now, I'm hearing more about the transition with that terrific executive herself, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.